I'm Harv Nagra. I'm an operations consultant, a former in house agency operations director, and head of brand communications at Scoro. Welcome to The Handbook, the Agency Operations Podcast, a space where we talk to fellow experts and operations leaders about agency life, discussing the challenges keeping us up at night, as well as strategies that help make things run a little bit smoother. Hey all, welcome back to the show. Operations is such a broad discipline. We're fixers, we're firefighters, we're strategists, we're analysts, sometimes we're therapists, and we're a lot more. Depending on your path to get into operations, you might be more excited by or knowledgeable about some areas more than others. But when we talk about being data driven organizations, it means that we have to be good with reading numbers and forecasts to make decisions and steer our businesses in the right direction. But business finance isn't something that we're taught in school and not something that we just pick up at work, particularly if we don't come from a finance background. When I got into ops, I relied a lot on my friend and colleague, our finance director, to fill the gaps in my knowledge. Something I did to brush up at the beginning of my ops journey was that I took the MBA Essentials program at the LSE, the London School of Economics. But something more tailored to the agency space would have been very welcome. Well, there's good news. There are better resources now. We'll be telling you about one of those today. So, as you will have gathered, we'll be talking today about agency finances. Why, as operations leaders, it's imperative that we develop our understanding in this area, the fundamentals and the factors that are important, and how you can improve your own knowledge so you can better analyze and steer your own agency. Our guest today is Alfie Wenegieme. Alfie is a certified chartered accountant with over 17 years of commercial finance experience. He's a managing partner at Cactus, our corporate advisory and growth consultancy for agencies. He's worked for large global agencies such as Edelman and Weber Shandwick. Alfie specializes in helping agencies with finance, metrics, growth, and profitability, as well as mergers and acquisitions. He also trains agency staff to be more commercially aware. Let's jump into it. Alfie, thank you so much for joining us today. Let's start with you telling us a bit about your background in the agency space.
Yeah, so I'm a chartered accountant by profession and
Mhm.
I've specialized in agencies. So I started off in a digital advertising agency many years ago, and I left there to go work for a big global PR agency called Edelman.
Okay.
I was with Edelman for a number of years and then I left to go work for Weber Shandwick. And my role in the agencies was commercial partnership with the leadership team. So working on all things profitability, so from pricing to planning, forecasting, budget, staff utilization, i.e. efficiencies around the agency, all the things you'd expect an agency to be doing properly if they want to be profitable. I then left Weber, started off my own consultancy, and then last year I joined Cactus, a bigger growth consultancy. And yeah, I'm still working with small to medium-sized agencies, helping them maximize their profitability.
Excellent. So let's kind of get into the discussion then. When you start working with a new agency, where do you start evaluating their finances?
Good question. So I think for me, it depends on what the problem is that I'm addressing. So broadly speaking, when I start working with an agency, it starts with an honest conversation with the founder or the leaders or both, just to figure out exactly what the pain point is, right? So why, if it's profitability, for example, what has been going on in the agency to feel that there's a problem with profitability. And again, it's a very honest conversation. So for example, if an agency were to engage me and say, we've got problem with profitability, we're doing all of these projects, but we don't seem to have any, profits in the business or cash flow or whatever it is, then a good starting point for me would be looking at the P&L. So, break the P&L down. You've got the top line, you've got all of the operational costs, you've got profits in its very raw, simple form. So if I'm looking at the top line and they're bringing in enough revenue, I then look and they got little to no overheads, then I know the problem might be around cost to sell or the staff costs. And then we start to address it, dive deeper and go into certain reports in the business. And this is where I guess what I do kind of intertwines with the operations side or the operations person they got in the business, because then I'd want to see other reports, like client profitability reports, or I'd love to see staff utilization reports, over servicing reports, that sort of stuff, to actually see where that hole is in the bucket, right? Where's the profit leaking out of, and then address it from there.
When people are engaging you, I'm just kind of intrigued by that. How proactive versus reactive are the organizations that are approaching yourself and Cactus, do you think? Is it like, they're looking to scale and they're being proactive about making sure the fundamentals are there? Or is it more that they're having issues and now it's an emergency and we need someone to help sort it out?
It's a bit of both. It's
Yeah.
a bit of both. So yeah, I think with that, again, I think an element of that depends on the size of the agency, right?
Okay.
So it is proactive sometimes because you get agencies that are profitable,
Hmm.
and then probably at some point they're looking to sell or something, and they want to get everything in place. They want to, get their profitability tight, the management team tight, all of that sort of stuff. So that's a more proactive approach, right? Or they could be growing from a very small agency and they acknowledge the fact that they don't know what they don't know. And then they want someone like me to come in and help them, manage the finances, maximize profitability, just give them a roadmap to where they're going, how to get there, sort of thing. That's a proactive approach. And then we also get agencies that are struggling, they were probably doing well. And then all of a sudden, they're not doing as well as they used to. And then now they need someone to come in and help them. For example, I've got probably 2 clients now who are in that situation where last year, before they started working with me, they were actually loss making. And then I came in and then we started working together. So over the course of the year, they just done their year end not too long ago, and they've made a profit this year. So in that case, it was more of a reactive approach. Yeah. Because I think you have to remember, a lot of founders, they haven't got that agency background or business acumen. So they've got no training in finance to know when to bring someone in or what to do, kind of thing. So as I like to call them, like accidental founders. So, they were good at particular service or, very good at, I don't know, web development or PR or whatever it is, started an agency, all of a sudden it took off, right? So they never got the chance to really learn about the business side, right? So people like that don't know what they don't know until there's a problem, and then they need someone to come in and then say, oh, this is the problem, this is how we address it, this is how we move forward.
I wonder if you can shed some light. What do you see at larger agencies versus medium-sized agencies? And is there any kind of interesting observations or problems that you might see there?
I would say, if we're talking, it depends on when you say bigger agencies, what you're talking about. Because if you're talking about, the big global agencies, and if by small to medium, we're talking about, the independent, so maybe 5 million and below. Oh yeah, I would say all of their problems tend to be the same sorts of problems. It's just on varying scales, right? When you're talking about an agency, we're talking about a service-based business. The biggest challenge you will tend to have, 2 things, I'd say. First is clients, so new business, getting money into the agency, especially now because of the recession and everything that's going on. Clients aren't spending as much. So it means, new business is hard, right? Like income is hard for agencies. So that's not problem number one. Because if you don't have money coming in, you don't have an agency. I don't care how efficient you are. That is a problem. So that's a problem regardless of the size. Every agency faces that problem, right? And then the second one is the people. Managing people. It's not like production businesses where, how much you buy, the raw materials to make an iPhone. So I just know every time I buy it at this, I have to sell it at this to make that margin. The raw materials aren't going to, up and leave the agency, or they're not going to work as hard, or, all of that sort of stuff. But when you're dealing with people, it's a different thing, because you need to manage efficiency and you need to manage churn and all of this sort of stuff. I've worked in the global agencies. I've worked with medium size. I've worked at small agencies, and it tends to be the same problems, just on varying scales, right? Obviously, there'll be small things here and there where a big agency might be slower to make changes and pivot, where a smaller agency can do that tomorrow. So I'll train or I do some consultation kind of thing with a smaller agency by next week. So by the time we meet again, they've done it. And, we can start to see the impact of what we've done. Where with the big agencies, it is a lot harder for them to do that. So, you might make all these recommendations. They won't do it till a year later, or they may never do it, right? Because it's just hard to pivot. But broadly speaking, problems are problems.
Thanks for that. So I've been thinking about this, the different stages of maturity agencies might be going through when it comes to thinking about their finances. So I'm going to propose some kind of groupings or generalizations to you and see what you think. Okay.
Yeah.
First, when an agency might be really young, they might be just looking at money coming in and money going out. Okay. Then they might start looking at finances on a high level, looking at the bottom line, looking at the P&L or profit and loss statement once a month or something like that. There probably then comes a time where they start paying more attention to the past, trying to understand what influences their numbers. That might be triggered by something like concern about their cash flow. And when they start looking at that, that's when they might realize that they need to improve their project or client level tracking. They might start adding more structure and consistency to how they quote, how they set prices, and how they track their projects in time. And then finally, when they're probably more mature, they start looking forward, looking at how they're performing against their budget and their targets and on forecasting, forecasting their sales, their revenue, their utilization or capacity. Does that sound roughly accurate, or do you see anything else?
Broadly speaking, I agree with that, right? But I think there are two catalysts that could kind of disrupt that order of things. One, I think, is the experience again of the agency founders and the leaders, because again, I've got clients that are small, but they've got a lot of all the things we're talking about in place in terms of tracking cash flow, tracking staff utilization, tracking client profitability. And when I say small, I mean sub $1 million. And then I've got some that are bigger, but aren't doing a lot of these things, right? So I think one is the experience of the founders and the leaders. Two, whether or not they've got people like ops people in there or finance people in there. The sooner you get these people in, the sooner you get a lot of these processes in place, right? Irrespective of your size or what level or category you are in, the grouping you've just given them. And then the other thing I think, which I think is the biggest catalyst, is just pain. So, if you're small and all of a sudden your cash flow is bad, it's impacted, you can't pay staff and do all of these things, you would then go to get someone that will help you put these things in place. So it improves your cash flow. So you could easily go from stage 1 to stage 4, right? Because the cash flow has been impacted, or, for some reason, the client profitability is bad, or delivery, if we're talking about ops, for example, delivery is bad, or whatever it is. When there's a huge issue, then I feel like people just hop between those categories that you've just given. They can just go from 1 to 4 or 2 to 3, a lot quicker than normal. But broadly speaking, absolutely. When they start off, it's this, and then they move down the chain.
I mean, that's great as well, that it's not a linear process. And obviously, you don't need to graduate in these increments.
Right.
Hopefully,
Absolutely.
you're able to take the leap. So the question I wanted to ask next, you kind of alluded to it there in some of your answers just a couple of minutes ago, but what kind of issues do you see most commonly when you're going in and doing these audits? This might flag with listeners issues that they might have internally at their own organizations that they can look out for. So what kinds of things do you see that are red flags?
So again, I think it depends on pain points, right? So for example, if they come to me and say, we've got a problem with cash flow, I know there's certain things that impact cash flow. The first being profitability. Profitability is a thing where, if you look at it on a personal, not a company, but an individual basis, if your expenses are a lot more than your income, you're never going to have spare cash, right? So for that individual, that spare cash is his or her profit. So same thing with a business. So if they said they've got a problem with cash flow, I'll look at the trigger, which could be a profitability thing, right? Are they making enough profit? If the answer is yes, then I'd look around the operations of the business, right? So your income is higher than what you're spending, but what are the things you're spending on? Can you be more efficient with your staffing, for example, to then make sure that profit is building up? And then, it could be other things like, say they got a problem with planning, financial planning. And then going, okay, what's your 4-year goal? What's your 3-year goal? Whatever it is. And then scale that back down to what's your 12-month goal and how are you tracking your ability to deliver against your target to hit that goal? And then kind of look at their process around forecasting and budgeting. If it was something around, training. So I just did 2 training sessions this week, Monday and Tuesday. And the issue there was the leadership just needed a bit more commercial training, right? Because again, back to what we've been talking about all this time, a lot of people fall into roles without understanding the business side, and they're good at those roles, whatever type of agency it is, but they don't have that commercial background. So I then, if that's the case, then I do a bespoke training, understanding the pain points, what they don't know, and all of that sort of stuff. Put a training session together and then go in and train. So that will be the solution to that problem. So yeah, it just depends on, again, the problem and then figuring out how to tackle it and approaching it.
Okay. So Alfie, ops people kind of step into this career rather than having planned for it in a formal way most of the time. So sometimes there's a gap in their understanding. Earlier you were talking about that gap in understanding of the MDs, but that applies to ops people as well, and certainly other people in the organization. But our podcast is targeted at ops people.
Yeah.
So just thinking about that for a moment, why should every ops person understand their agency finances and make that effort into expanding their knowledge?
Yeah, that is a good question. So for me, when you talk about the operations of an agency or any type of business, right, the success of the business depends on how effective their operations are, how well they manage costs, how well they manage money, people, all of that stuff, right? The operations of the business. Now, if you're an ops person, then that's your role to make sure that everything's running smoothly. You're optimizing all of the processes and all of that, right? If that's the case, that as an ops person, your role is to optimize operation, if you think about it, the finances are the result of your operation. So if we're doing what we're meant to be doing properly on the client side, we should have a good income coming in. If we're efficient with the staff, we should, have good profitability, that sort of stuff. So understanding the finance is understanding how well what you're doing is working. Do you see what I mean? So I think it is very important. Someone not understanding it, to me, if I can give an analogy of, say, like a personal trainer, right? That's working with a client to, say, lose weight. An ops person not understanding the finance, which of course is the receipt of your work, would be like that personal trainer not being able to interpret or read the scales, right? So how's he going to know if all the work he's putting in is working with that client if he can't read the scale? If every time the person steps on the scale, he can't interpret where it's moving. But for me, I feel an ops person really needs to understand finances to be able to track whether or not what they're doing is actually working properly in the business. And if it's not, then figure it out and then approach your operations a different way, tweak it, look at the reports, see the results and see if it's working or not. If it's not, tweak it, adjust it. Do you know what I mean? As Peter Drucker said, what gets measured gets managed and what gets managed gets improved, right? So you have to be able to track it to be able to improve it. And that finance is kind of the result of the operation.
Absolutely. The proof that what you're doing and implementing is working. I really like the way you've put that. Okay, so we're going to get a little deeper into this. Then let's get into some of the core concepts that an ops person should understand.
As far as agencies are concerned, first and foremost, understand the fundamental terminologies in finance, right? Understand your different metrics, understand different terminologies, because when you're speaking to your FD or, finance person, whatever, you don't want to be lost in the room, right? If the person's saying things around our profit margin was this, or our gross profit was that, or this, or that, or the other, first and foremost, you need to be able to understand what they're saying. Or if you're looking at a report, you need to understand what you're looking at. So that's first and foremost. Then I think, being able to look at the basic or essential reports, balance sheet, the P&L, and a cash flow statement, that is very important, especially the P&L. because the P&L is the direct kind of, like I said before, receipt of the operations. So the P&L is a profit and loss account for people who don't know what that stands for. So the ops person needs to be able to, do those two things, understand the terminology, understand report and what they're looking at. And then I think they need to then understand other things that relate to people, the different metrics that you need to be looking at when you're looking at managing the efficiency within the agency. So, being able to run your utilization report, being able to run a client profitability report, being able to run an overservicing report. And it's not just running them, because I've been to agencies where they've got all these reports, but they don't know what they're looking at. They don't know what they're looking for. If you don't know what you're looking for, you don't know what to address. And for me, I'll give you an example. Yeah, if I was looking at a utilization report as an ops person, and the utilization might look great, everyone's billable based on their designated billability percentages. They're amazing. Everyone's billable, whatever. But then there's still a problem with, client profitability. So I'd need to be able to pull another report and go, okay, that against this, how does it look? If there's a problem, then I need to be looking at another thing, right? I need to pull, say, an overservicing report and then look at that and see where the hole in the bucket is. Why is everything not adding up if this is so good? But someone who doesn't know how to, read these statements and these reports will just look at one thing and go, oh yeah, everything's great. Let's move on, right? So I think being able to understand those reports, is very important as well. And then the other thing I think is just general, commerciality, just being able to know if this is an issue or if this is where we're trying to get to, what are the stumbling blocks? If I'm looking at a forecast, what's our process behind managing that forecast? If we don't hit this target or we don't hit this metric, what is the effect? What does that mean for our goals? How do we mitigate that problem? I think that these are the sorts of things that an ops person needs to know and needs to understand.
Really, really good examples there. It's really interesting what you said. There is, I think, a stage of maturity where an agency gets to where they are collecting good data. But what you said there a minute ago is about leveraging that data. Not everyone gets to that stage and might need some nudging and learning to be able to get there. Just having the data, if it's not serving you, then it's not really helping your objectives. Let's get into one of those areas then. How does pricing and scoping impact profitability?
Pricing, I always say, is the quickest and the most effective way to improve your profitability, right? So when some clients will engage me and ask me to come work with them, or, they've got an issue to address around profitability, I look at their pricing model, right? Because I think many times when finance people or ops people or project management people kind of look at projects and they say, oh, that project is overserviced, it's not profitable. It's not that it's overserviced, it's that the pricing was wrong, right? And what that means is that you'll kind of play catch up, but you're never going to catch up because the price is too low. So pricing has a big role to play in profitability, and being able to work out what your margins are is very important. And that's one thing many agencies don't understand, because what they'll do is, and I speak to many agencies that fall in this category, right? I'll say, okay, cool. It looks like you've been charging clients X, Y, Z. How did you come up with this price? General kind of answers I get things like, oh, my friend's got an agency that's similar to this, and he gave us his price rate rate card or whatever, and that's what we use. Or, yeah, we've done this in the past, and this is what we charged. Or they'll say something like, yeah, agency I used to work at before, this was their rate. But what they don't understand is you need to be able to calculate pricing based on your agency, because the components of price, say agencies that have got rate cards, for example, the components in that rate card is made up of the internal costs, so the cost of the people, staff related costs, some adjustments for utilization, depending on what level the person is at. And then you get to the cost per person, and then you put a margin on top. And that cost will vary from agency to agency, and type of agency. So if I'm taking your rate card from your agency and you pay your people less than my people, I'm not going to make as much profit as I think I'm making, because my people are more expensive. So even though we're charging the same thing, I'm getting a different outcome to you because my cost, plus overhead built into that as well. So pricing just needs to be addressed on an agency to agency basis because all costs are different, right? So that is how pricing impacts profitability. Now, when you talk about scoping, you can get all of the pricing right. Perfect. If your scope isn't as specific as in detailing what it is the client is paying for, then you've got an issue there. Because an example, when I worked for one of the big agencies, because I'm looking after loads of different practices within the agency. So one of them had done a budget and then done a scope, and then the scope just had a one-liner saying for professional services. And I was like, that is insane. Because again, you could have done the pricing tremendously, amazing price, right? But if you send that sort of scope out to the client, they're looking at it going, oh, cool. We can have everything and anything that we deem to be professional services in this scope, in this pricing, in this budget, right? So you don't want that. So your ability to scope effectively impacts the profitability as well. So the combination of both, and then the final stage will be then the execution against what it is you budgeted and scoped, that impacts profitability.
You kind of alluded to it there. The formula to calculate your cost of an individual, can you just take us through that? There's obviously the salary, and what else goes into that?
So you've got the salary, you've got the cost relating to salary, and then you've got your overheads. And then the other piece, which makes it a bit complex, is then the utilization of that person. And then you've got a margin on top of that. So all of that stuff, all of the, three things I mentioned first will give you the cost for that person. And then the margin is up to you how much margin you want to make on that person. I say person, it could be role, it could be, however you choose to do it. But that's how you build up the rates.
And when you're kind of thinking about this, you mentioned their utilization. Do you also remove their annual leave and time off and that kind of thing?
Yeah, exactly. Yeah. To get to the right utilization. Yeah.
Right. Otherwise, your rate is assuming that they're going to be working 365 days a year, which is not correct.
Which is not correct. 100%. They're not going to be in the agency 365 days a year. They're going to take holidays. They're going to get ill. They're going to do all of that sort of stuff. So you need to factor all of that in and then take that amount and then build the rate based on that.
Got you. So is there any kind of profit or profit margins that agencies should aim for? Is there kind of generalizations we can make on that?
Yeah, it depends on what they do, again, how efficient they are and all of that stuff. But broadly speaking, you want to be making like a net profit of at least 15%. Between 15% and 20% is kind of standard if you're doing well. But, some agencies make 25, 30%. Again, it just depends on the sort of agency, so the sort of stuff you're doing, and then I guess the amounts of cost you've got attached to the income you're making, right? How senior is your staff? The person who's got an office in the Shard versus someone who everyone works remote will have different costs coming in, and that impacts your profitability. And I guess where they are in their journey as well. But 15%, 20% is what you aim for, which is a good margin. But like I say, people do 25, 30%. It just depends.
And how does that differ from a project profit level that you should aim for?
So the difference there is, if you understand the P&L, you'd understand gross profit, operating profit, and then net profit, right? The project profit is the starting point. In accounting, we call it contribution. The contribution just means the income you're making minus the variable costs will give you that percentage. So in project, that is what you're talking about as contribution. So you need that percentage to be as high as possible. So off the back of that, you can then, when all the other costs, other operating costs come out of that, you can make that 15, 20, 25% profit. But if that client profit is low, you still have to cover the direct cost, the fixed costs, right? So that means you're going to have a low net profit at the end. So that's the difference. And that's one thing I think people need to understand, because I remember I worked at an agency one time and we were going through our meetings, looking at some of these reports, and then, and these were senior people. Everyone's like, oh, we're making that much profit. Wow. They were looking at the project profit, the gross profit, and they were going, oh, and next thing that goes into people's minds is, well, why aren't we paid more? But then I had to break it down to go, no, that's just the project profitability. So that's the gross profit we're looking at. But the agency still has all these bigger costs that are going to come out before they make that little bit of profit. So that's the difference there. And, that's something that, people need to understand.
So when it comes to agency financials, let's talk about kind of the amount of knowledge people might need in different kind of roles, if that's okay. So,
Mhm.
starting with the MD or founder, and then we'll look at the ops team versus department leads versus the doers, the developers, the designers, and things like that. So if you can just kind of shed some light on that about what we should expect our teams and ourselves to be at based on our role.
For, say, the MDs, the ops people, senior leadership, I think an understanding of what I talked about before, i.e., the financials, the terminologies, the reporting around finances, that is very important. Then, the reports you'd run on an operational basis, still kind of within finance, i.e., all of those profitability report, client profitability reports, the over servicing report, utilization, all of those things need to be understood. Forecasting, both parts of the MD, leadership, ops need to understand forecasting because all of the decisions that are made tend to be based on the forecast, right? What are we going to do in revenue that will allow us spend this much and make this much profit, right? So an understanding of the budget and the forecast is important at those levels. And I think when it goes down to the doers, what they need to understand again is a broad understanding of what we talked about there, but not an in-depth understanding. But the main bit they need to understand is the activities and the everyday things that they do that impact the goal of the agency, right? So that needs to be aligned. So a very simple example for agencies that, time track is the doers need to understand why they're time tracking or why they're being asked to time track and how that impacts the project profitability and how that impacts the agency profitability, right? So I think it's just the things the doers would need to understand is the things that relate to their day to day. So again, things like over servicing report, right? That they need to understand because they can impact those particular things. If they can't impact it, they don't need to. They don't need to know it.
So, Alfie, if anyone listening is recognizing gaps in their knowledge and they're understanding that they need to brush up on some of this stuff, I read somewhere that you're launching a course. Can you tell us more about that and what kind of areas it gets into?
So I'm launching a course. It starts in October, and that particular one is for agency founders, agency leaders, finance people, ops people, so senior leadership, right? And what it is trying to do is, we talked about those accidental founders. This training is aimed at people who, again, don't come from that agency background, don't have that finance background. So this is telling you everything you need to know about the agency finance, the agency business. It won't make you an accountant because that will take you a few years, right? And I wouldn't recommend anyone does that.
Yeah.
But what it will do is tell you knowledge of the fundamentals of the terminologies of the reporting. So it will tell you what all these things are. It will tell you what the management reports you need to be looking at are. It will tell you when you need to bring on the right support. It will tell you about how to work out your pricing, all of those things that I feel agency founders and leaders need to understand about commercial finance. I do that. So it's a 1 day session, it's a full day to go through all of these things. So that's the bit for the senior leadership. And then I also do bespoke training, like I mentioned before. So that could be a broader kind of training that's tailored to the agency. So for example, I talked about timesheets, right? So if you've got an agency that's struggling with timesheeting because the doers don't really understand that stuff, then I can put a training session around commerciality, around profitability for that level. Or for example, one of the ones I did this week where they had new account directors that had just come in. So joined kind of like the leadership level, and they needed commerciality training and knowledge of, what was going on and how to do things and how to approach things. And just because I think decisions made without, commercial awareness tend to be decisions that are flawed, right? Because people make them based on what will the client love, but what the client will be happy with doesn't always work for the agency. So you need to have that commercial awareness to be able to question things and ask, okay, can we do it better? Can we run it in a way that it works for everybody, the client, and it works for us, and we make a profit? Because at the end of the day, it's a business, right? So you need that. So my thing is, I want commerciality. I want finance. I want commercial finance to be part of every agency's culture. There was a thing of anybody joins the agency, this is how we do things around here, right? And this is how, and because once everybody's on board, it makes it a lot easier to implement things, even as an ops person. Because if you're saying to someone, this is our new process, and they know why that process is in place and how it impacts profitability, then they're likely to do it, versus you're saying to someone, okay, this is the new process, and they think you're saying it for the sake of saying it, right? I've been there in the past where I'm the one saying, oh, this is the new process, and everyone's looking at you like, well, you're just making our lives harder. But when they understand why, because they're more commercially aware, it makes the whole process a lot easier. So yeah.
Yeah, really interesting. And I've never thought about this, but I think if you are doing this kind of training, then it should become part of your onboarding process. So it's not knowledge that your team today absorbs, but all your new starters are going to learn that as well. So a really great idea for anyone that is thinking about getting your support or building this kind of knowledge in-house as well.
That's so true, because I've got two clients who it is part of their onboarding. So when they've got a period where new starters come in and then they do kind of like an induction thing. So we've got a training that we do around commerciality. So every period when that comes around, so we do it quarterly, they bring all the new starters in and we've got a training that they go through. So you're inducting them into the culture of the agency. Well, you've done the session already for your team, so they get the culture, but you need the new people to understand it as well. So it just blends in. Otherwise, what you get is bad behavior coming in to corrupt what is already working. So yeah, that's a good point you raised there, and it is part of what I do as well.
I really, really love that. Whoever is doing that, well done. The rest of us can take inspiration from that. So, Alfie, just a couple more questions very quickly.
Yeah.
What kind of proportion is your time in terms of training versus kind of the hands-on support for the agency?
I'd say maybe 60-40, because the hands-on, the way I work with clients is once a month, right? So yeah, so once I've met with all of my clients this month, we'll catch in next month. The training kind of sits in between. Those just, kind of like where the other bits, the consultancy is on a retainer basis, the training tends to be more project. So, again, it's bespoke. So I'll go in, come up with a training package, and we do that training in a day or half a day or over 2 days, whatever it is. And so, yeah, I'll say 60-40.
Okay.
Yeah.
Excellent. Alfie, if anyone wants to learn more about Cactus and yourself, where can they find out more information and where can they connect with you?
Yeah, so they can go to the Cactus website, is cactus, CACT.US, or on LinkedIn, you can pull up Cactus on there. Or if you wanted to, DM me, you want to speak to me, go to my LinkedIn. Yeah, let's have a conversation.
Excellent. Well, thank you so much. I feel like I've learned a lot just speaking to you.
Yeah,
And
thank you.
hopefully at some point, Alfie, we can have you back to get into more of the detail on these areas as well. So that would
Absolutely.
be
Whenever
amazing.
you need me, for sure.
Excellent. Hello again. I hope you agree that was a great conversation with Alfie. I really love speaking to him, and he makes things really easy to understand. Do reach out to him on LinkedIn if you're looking for any advice or have any questions, or look him up on their website. That's cactus.us. And on that note, is there any area around finance or agency metrics you want us to get deeper into in an upcoming episode of the podcast? Whether it's you coming on the show to tell us how you calculate and use those metrics, or whether you want us to bring in an expert to talk about it, please drop me a message on LinkedIn and let me know. I'm at linkedin.com/in/harvnagra. And please do share this episode and the show with your friends and colleagues in the agency space. And please do share, like, or comment when I post about the interviews on LinkedIn as well, so we can boost the visibility and grow our audience. I appreciate your support with this. I'm excited that we're having more regular and helpful conversations on agency operations that all of us can learn from and be inspired by. Lastly, a quick note. I am thinking of slowing down the pace of the show from weekly to every other week just to make it a bit more manageable on my end to produce, and also to give you some more time to keep up with the episodes as well. So let's see how that goes. And I look forward to having you back in the next episode. Thanks very much. This podcast is brought to you by Scoro, a platform designed for agencies and consultancies, which allows you to manage your projects, finances, and resources, all from one system. This is a platform I brought in at a previous workplace, which completely transformed the way we worked, and which I've recommended to clients of my own. You can sign up for a free trial on Scoro.com. That's Scoro.com. Or reach out to me, Harv Nagra, on LinkedIn if you'd like to hear about some of my experiences.